started off my career as a stock analyst. Okay. So imagine we have a stock. Okay, let's call it, XYZ. And we shot it full of holes. Like they should have been kill shots 6 times, right? Because every one of those was a kill shot for this bull market. And yet this thing.
What are the things? The inflation cycle.
Well, for COVID, number 1.
Fastest Fed hikes in history.
Yeah, and then the bullwhip chain effect was number 2. The fastest Fed hikes, the fastest inflation cycle in history, the fastest Fed hikes in history, the Trump tariff shock, and then U.S. bombing Iran's nuclear facility.
Of those should have produced a bear market.
Yeah, should have killed the bull market. Or even killed the economy.
So what does that tell you?
Just you don't even have to know market history, just common sense. The United States is bombing an Iranian nuclear facility, therefore by the spoos.
Yeah, you never would have
morning, nobody would do it.
If you asked me in January, I'd say, okay, we got a risk of a bear market.
Right.
Yeah.
And none of these things has produced a sustainable.
That's right.
We've had bear markets, but not a secular bear market.
Yeah. So let's say that this stock was 16 times and we shot it 6 times over 5 years, just kill shots.
Yeah.
And it grew earnings every year.
Yeah.
We would say the PE has to go up a lot.
And it hasn't.
It's actually lower. It's a cheaper market
It's
today.
incredible.
Yeah.
So I don't think most people are looking at an equal weight market.
Yeah.
So that's number 1. And if they are, they're not looking at the valuation.
No, they're looking at
Palantir.
Palantir.
Yeah, they're looking. When people say there's only 7 stocks going up, I think it's a false portrayal of the stock market.
There are 7 very large stocks.
Correct, but with the big earnings.
With big earnings.
Yeah.
Justifiably large.
Yeah, and I'd say the reason it's not just 7 because our granny shots is only equal weighted and it's beating the market this year.
Right.
And it only buys quality growth.
So that ETF, that strategy is not reliant on having a 10% slug of the biggest stock in the world.
And it would hurt an ETF because granny is an equal weight by nature.
So I agree with you. I don't buy into the 7 stock paradigm, but the thing that I probably believe that you would disagree with, I think the entire stock market return this year boils down to AI capex. We're talking about utilities. Why did utilities get re-rated? AI. Why are financials ripping? Because of all the activity on Wall Street related to capex and AI stuff. M&A, IPOs, it's all one. Industrials. Well, what the hell are they doing? They're building data centers. They're building gas transmission to power the data centers. The whole thing is AI.
Correct.
There's not a second thing happening. The GLP-1 bull market's dead. I don't know of another. Even the quote unquote the strong consumer stocks looks like shit right now. Nike, Chipotle, Starbucks isn't doing much. So if there's one game in town, but it's affecting 4 of the biggest sectors in the market, it's a fairly fragile, or maybe I'm wrong, it's a fairly fragile thing to rest on. Oh my God, I hope this AI capex story holds up. Because if it doesn't, it's taking down everything with it.
Yeah.
Do you disagree with that, or you're on the same page with me?
Okay, so I'm going to 100% agree.
All right.
That AI...
We can close out. Let's do favorites. All right, go ahead.
That AI is the most important driver of the global economy. Okay. But where I think people make an inference mistake, okay, is that a theme driving the global economy has been systematic to the global economy since capitalism was
always
started.
this way.
Yeah, there's always been an industrial revolution.
Okay, fair.
And even in the 80s, the retail sector was the best group for 20 years because boomers were entering women were entering the workforce, and there was a baby boomer thing on retail stock. So that was a single theme of demographics. And the internet boom was a singular thing of actually creating digital infrastructure. So it's always been a story of the stock market.
All right, Tom, let's do some crypto stuff. So, because people love that. Just kidding. No, they don't. Nobody owns crypto. And I know that's not true, but it's the people, it's the companies that are buying the crypto. It's you guys, it's Saylor, it's the people that are early adopters. There are still a lot of people who just feel like they missed it. They hate when we talk about it. It's enough. Bank of America, they ask their clients, do you guys own crypto? And 75% of them are at 0. So it is this weird thing where the price keeps going up. We know some of the reasons why, yet nobody seems to be owning it.
Yes. We know crypto is a generational divide. Because if you did the survey with someone under age 30, it's probably like 50% own crypto. But history shows pretty clearly it's people in their 20s and 30s that are driving all future change. Credit card spending shows their
The
investment.
75% doesn't matter, in other words.
Yeah, or the 75% is going to flip to 75% own crypto.
That's a minority. Like, people in traditional finance still do not want to hear about any success in crypto. And I think my answer to why that's the case, I think they look at the people who have made millions or billions of dollars in crypto as having done something illegitimate or lottery-esque. I don't think it captivates their hearts and souls. They don't look at it like, look how smart these people are. And what's so funny is there are famous value investors who haven't outperformed the market in 15 years. If I put them on YouTube right now, the views would skyrocket.
Yeah.
And you know the names I'm thinking of. I'm not going to say them. But it's like, let me get this straight. This asset class has been the best performing asset class in the world for 10 years. And you don't want to give any credit to the people that saw it early and capitalized. You'd rather hear from somebody who couldn't make money if it hit them in the head because they're quote unquote doing it the right way.
Yeah.
I think that's what's going on.
Yeah, it is. So imagine like if your neighbor one day discovered oil in his backyard and became like really rich.
Oh, you would hate his
You'd
guts.
hate him for.
Yeah,
I agree with
that's
that.
it.
And
That's
then he's like becomes an oil evangelist. You'd be like, I hate oil.
Enough with the oil. Shut up with the oil.
Right, I hate you.
Yeah.
I hate oil. Right. All right. So that you think
And
that's
then
what
imagine
it is?
the oil did have a lot of scammy parts to it,
Yep. And
right? You'd be like, enough with the oil.
Well, that's
Yes.
right. That's the other
And
thing.
yeah.
A lot of this money, they view it as scam. Like a
Rug
lot of the
pulls.
activity.
And there's a lot of
is
bullshit.
bad.
But I want to talk about this. All right, specifically with Bitmine Emerging Technologies. The risk to any asset class, the primary risk is leverage. And leverage took down crypto in the last cycle. A lot of bad actors. Talk about, so you tweeted, or Bitmine tweeted on August 18th, that you guys held 1.5-ish million ETH, valued at $6.6 billion. Is this leverage? Where is this money coming from? And why are people who say that this is like the epicenter of the next catastrophe wrong?
okay. I assume you're meaning leverage of Bitmine. Like, does the Bitmine stock have a leverage?
Just what you guys are doing, what Saylor is doing, like,
Yeah.
is there going to
The
be more?
concept of the crypto treasury involves we're going to borrow money, use it to accumulate these coins where the supply is shrinking,
Yes.
and that's the
Sure.
secret
Like,
sauce.
will there be
Yeah,
a margin
so-
call? Is that the
Okay.
risk?
Yes.
Talk about
well,
that.
if you could let me do like a couple minute explanation here. On-
Duncan, what do you think? We can allow it? You
Yeah.
good with it?
Let's do it.
Because it's not a sense.
I'm
Yeah.
genuinely
Yeah.
fascinated by this.
Yeah,
so
I'll
I want
get
to hear it.
so on June 30th, Bitmine announced the transaction where I joined as chairman, and then Mosaics, who's my partner in this, became the digital consultant to help manage the treasury. So essentially, we helped recast the company as an Ethereum treasury company.
What was it prior? It was tanning salons?
No, it was a Bitcoin mining.
Oh, it was a
company.
mine. Okay.
Bitcoin
Okay.
miner.
Got it.
And at that time, there was a $250 million investment that we brought in, Founders Fund and Stan Druckenmiller and
Real
a bunch,
people.
real people. And at that time, there was $4 of Ethereum per share, and the stock was $4.50.
So no premium, effectively, almost no premium.
Yeah,
Okay.
that's right. And then we've used capital markets, like brought in institutional investors subsequently, and then bought more Ethereum. So
You sold them new shares of stock,
yeah,
secondary
that's
offering?
right.
Okay.
That's right.
Got
And
it.
that includes Kathy Wood and Bill Millers. And so last week we
I don't remember you calling me, but okay. Continue.
Yes.
We can talk about that later.
yes.
Okay.
And last week there was an updated registration statement filed, so you could calculate how much Ethereum was held per share, and it was $35 per share.
Okay.
So the stock, you had $4 of Ethereum per share on June 30th, and then last week at the registration statement, it was now 35, and the stock was trading at like 1.5 times, because stock was, let's say 50, 1.5 times its Ethereum held. But when you bought it on June 30th, it was trading at 0.2 times where the Ethereum would be in a month later.
Okay.
Now, all of that was financed with equity. mainly institutional investors. There's the only debt on Bitmine's company is $1 million loan that was originally there on June 30th. So the company had but everything, its first principle is it's literally straight, clean equity.
So no leverage. It's cash to buy.
Cash to buy.
So you guys call Druckenmiller, Kathy. It's like, hey, we're going to do this thing. We're going to use this stock as a vehicle to acquire ETH.
Yeah.
And we need to sell stock to you in order to facilitate those purchases.
Yeah.
In other words, you're putting money into the company. We're issuing you shares in the company. We're going to take your money that you give us and we're going to buy ETH.
Ethereum. So Ethereum, number one, is where the stablecoin boom is taking place. 60% of it. So like this whole Genius Act, Besant says stablecoins are going to go from 250 billion to 4 trillion. That's an exponential demand growth for Ethereum.
They're replacing money market funds.
Correct. And it's dollarization and all that. Ethereum pays a 3% native yield if you stake it. So the 6.6 billion held of Ethereum is over $200 million in net income right now. The day we turn on staking, not only is there no debt on Bitminer, it's going to pay you $200 million a year in dividends.
And what do you do with that? Buy more Ether?
Or we might just pay it out as cash dividends.
Where does that 3% native yield come from? Is that gas fees that
so
users are paying to use ETH?
Well, it's called proof of stake. So Ethereum doesn't have a proof of work model where you're competing for a block reward. It's saying if you hold ETH and you agree to stake it and validate transactions, you earn the staking fee, which is 3%.
Okay. So that's where that's coming from.
Yeah. And then there's a power law force at work that if we get to 5% of Ethereum, we become a really benevolent staking entity. That's why we want to get to 5%.
One of the many distinctions between ETH and Bitcoin for people listening that don't care that much but care a little is that the Ethereum Foundation and the Ethereum whales are fairly coordinated.
Yeah.
They have made changes before in the protocol, and they have changed ETH like successfully, I would argue.
Yeah.
To make it more useful to the community. Whereas Bitcoin, there was one major fork where they created Bitcoin Cash. But other than that, it's probably too dispersed for there to ever be any kind of coordinated action.
That's right.
Okay, so this is not quite as decentralized as Bitcoin, but it's more useful for things like stablecoins.
Yeah, so we're working with the Ethereum Foundation because we can explain to them what Wall Street's looking for. So keep in mind that the Genius Act and then SEC's Project Crypto is the recognition that using blockchain makes Wall Street faster and more efficient. I've seen it at Bitmine because like when we get the cash, the minute it touches the blockchain, it moves we have much better visibility and it's much easier to move, to actually track the money. The wallets are all tracked. And this is like 1971 because in 1971, the dollar went off the gold standard.
Yeah.
And everyone said, oh, I'll buy gold instead. But remember, the dollar suddenly became a fiat.
Yeah.
And Wall Street innovated because they said, now we have a dollar. Let's make sure we can move the dollars efficiently.
You don't need to move bars of gold to match the movement of the dollars.
Correct. So it created Wall Street, came out of that single act in 1971. So now, 2025, Project Crypto from the SEC and Genius Act is saying, Wall Street, take advantage of this new technology to make Wall Street a tech industry. But they're all choosing to do it, or the majority are choosing to do it on Ethereum. Ethereum is a smart contract platform and has what they call EVMs, Ethereum virtual machines. So you can do basically a lot of smart programs and contracts. That's where Robinhood is doing their stable coins, the tokenized products on top of Ethereum.
How big could ETH get? I hate the term market cap because it's not applicable. Your company has a market cap. ETH doesn't have a market cap. Has a market size.
It has a network value.
What is the current value of all the ETH in the world? How big do you think it could get? Because working backwards, that's what the 5% stake in ETH, right?
Mm-hmm.
Okay,
yeah.
so what do you think?
It's about 480 billion right now of fully diluted network value.
Okay.
But
is the supply contracting or not yet?
It's actually growing about 1%.
Growing
which is
1%.
It's slower than Bitcoin's inflation rate.
Okay.
It's actually a third of Bitcoin's inflation rate.
Okay. How big do you think that could be?
Well, I think that there is a very high probability, I'm going to say maybe even 50%, that Ethereum's network value will flip Bitcoins.
Wow.
Like when?
The flippening.
Maybe in a couple years.
People have been saying this for a long time.
Yeah.
How much bigger is Bitcoin now? Is it
It's
six times?
2.2 trillion right now.
And ETH is what, 400 billion?
Yeah.
So
all right.
but you're not an ETH maxi. You think
I'm not. I'm
you
still a
think there will be
Bitcoin bull.
both.
I think Bitcoin's
Okay.
going to 1 million, but I'm saying like Ethereum's relative size, the ratio will actually be 1 to 1.